Hello and welcome. You're watching NewsX with me, Devika Chopra. US President Donald Trump has hit the global markets like a tornado, while Sensex has slumped 930 points. Nifty has fallen to 22,900. The United States markets wiped out trillions in the biggest crash reported since COVID-19. European stocks too faced the heat, plummeting over 4%. This has sparked recession fears, and the trade war has escalated, with Canada and China both imposing reciprocal tariffs against the United States. India, on the other hand, has said that it is studying the tariffs currently and also sees an opportunity amid the storm. With the global markets facing simultaneous crashes and the standoff between major economies like US and China expected to increase, what really happens next? We take this conversation forward. I have with me on the broadcast Mithali Nikore, economist, Dr. Sharath Kohli. With us as well is Gautam Mukherjee, Dr. Jayajit Bhattacharya with me as well. Let me begin this conversation with Dr. Jayajit Bhattacharya. Dr. Bhattacharya, what is your reading of where the markets are currently and where they're headed? And should people really be worrying at this point in time, given that this was expected? The thing is that Donald Trump has implemented what he promised, but this has not been a surprise to any country per se. Yes, one can argue that he didn't give nations an opportunity to really speak to the United States of America to come up with any sort of a bilateral plan as far as tariffs are concerned. But it is clear that most countries would have possibly taken the time since his election to really study their own trade with the United States of America and look at what possible other avenues they can open up with countries across the world. So, in your assessment, how long do you think this stock market crash is likely to continue, and what would be your advice to people?
Unfortunately, my view is that the stock market crash or the uncertainty in the stock market will continue for a little longer time, just because what is certain is that there will be uncertainty. What do I mean by that? Is that whatever the US administration announced as of 2nd of April, it's not the end of the matter. It's just the start of the matter. And that has been reiterated again and again. Products which have been excluded, the Trump administration has come back and said they have been excluded only temporarily, and there will be tariffs coming on each of those products as we move forward. And how much would those tariffs be? Nobody knows. There is absolute uncertainty. Even as we use the word tariff, it is now known everywhere that what the US administration was calling a tariff was not really tariff. That number is a ratio of exports, is a export surplus from one country, the trade deficit from one country divided by the total exports. That is not tariff. And it's a ridiculous figure. So how would anybody really calculate, estimate, figure out how to change the supply chains when the definitions of standard terms are not being used? Even if the governments have been looking at it for a few months since Trump got elected, what can a government really do? You cannot change supply chains overnight. You cannot change the destination of your products overnight. It is a very, very, very long process. And in that process, there will be a large number of disruptions that will happen. There will be disruptions in every single product line which has had tariffs that will happen. Plus, there will be disruptions in products which have not even been tariffed using the Trump administration language. Even if they have not been tariffed, they will still be impacted because everything is interconnected in a global economy. Now, you look at the simple fact, and I'll repeat it, and I've been doing that in multiple channels. Because the cost of every product is going to go up in US, the consumption in US will go down. Because the consumption in US will go down, the exports from other countries will go down, and because of that, there will be less consumption in other countries, and therefore it will become a vicious cycle. More importantly, if you look at just the US market, almost 1% of their GDP has got wiped out because of the wipeout that happened in the stock market. And 1% of GDP overnight is a very significant amount. Also, what is being estimated is that the cost of living increase per household will be 10% of the median income of the households on an annual basis. Now that's very significant because the median income in US is about $40,000, and it is expected that $3,800 will be the increase in their annual cost. That's very, very significant. That is going to have a deep impact on how the US consumers behave. Unfortunately or fortunately, the US market is still the largest market, the largest economy, has a disproportionate impact on how the rest of the world works. And therefore, any disruption in how the US consumers behave will have its cascading impact on every other industry. If you look at just automobiles, because that's how the conversation started in terms of tariffs, it has got over 16,000 parts. I think any automobile has got 16,000 parts. Parts come in from outside of US, go into US, go out and get value added, then come back and then get finally assembled. Now, in this to and fro, how do we change where the source of those parts will be? Unfortunately, or fortunately, again, India is a large provider of auto components to US. What happens to these? If you
Yes.
look at Royal Enfield, it's got a significant portion of the mid size motorcycle market in US.
Yes.
It produces fine mobiles. Now, how will they respond to a 25% hike in the tariffs? They will simply lose that market. That has an implication on the share price of every other auto ancillary and auto companies in India, and so is the case with all other products. And therefore, for quite some time, I don't see the market recovering in the next few weeks.
Okay, Mithali, then if you can build on that point, if the markets are not recovering in the next few weeks, which is, like I said, something that was being spoken about for the past few months. This is not something that has just suddenly happened on the 2nd of April. And everyone knew that Donald Trump will be imposing those tariffs. But I want to understand from your perspective, what is it that you would then advise for people to do at this point in time? Because what happens is that the moment the markets crash, it spreads like wildfire across the media, of course. We start talking about it. But ultimately, a lot of investors feel that they need to quickly pull out money from the markets before it crashes further. So, in such a scenario, how do the governments really then go about it? What would be your advice in terms of just giving some sort of reassurances to the people that your money is not going to be wiped out completely simply because the United States of America has decided to impose tariffs?
Absolutely, absolutely, Devika. I mean, definitely the sense of panic that any investor might feel in this time is completely natural and understandable. But, it's important to look at two pictures which are very, very critical. The first picture is the domestic market picture, right? Because if we look at the Indian economy per se, India's exposure to US exports is actually limited in some ways because, of course, our exposure is very high when we talk about sectors like pharmaceuticals and IT services and financial services. But luckily, at this point in time, these sectors have been exempted and they have not been included in this round of tariffs. So I think the first thing is, to somewhere see that, okay, the exposure currently, if you are an Indian investor, definitely your exposure is a little bit less of our entire economy, and the consumption of our domestic economy, like the consumption economy that we have built our growth on, is still very strong. We are the fastest growing emerging economy, and these tariffs actually present an opportunity for India because it means that, the European Union delegation was here. China, Japan, South Korea are coming together to fight these tariffs, and they are also looking at India as a partner. BRICS economies are coming together to say, can we trade a little bit more? So the Indian domestic market and also the new, diverse export markets that are opening up to India present a very good opportunity. So it's not like all is lost for India, right? So if you're an Indian investor, I would say like the strength of our economy is not dependent fully on the US merchandise trade. Yes, services trade it is, but merchandise trade not so much. And the second aspect I would say is that we have to look at a medium to long term picture, not only a short term picture. So definitely, if one looks at how value chains will adjust over the next 2 to 3 years, the kind of slowdown that Dr. Jayajit has described, I completely and 100% agree with it. the stagflation is coming in the US economy. It will happen. That will definitely have a generalized impact on the rest of the world. But it could also be a scenario where the US is now cut out of a lot of trade supply chains, and the rest of the world goes ahead and negotiates its own supply chains. In that situation, it could only be an isolated impact of the US economy. Of course, it will have a detrimental impact in the short run, but in the medium to long term, other economies will move away from this US dependence, and that will also bring more growth and opportunities. So I would say that on both counts, investors need to just take a slightly medium term perspective, stay parked in for some time, but of course try to diversify their stocks and try to diversify the equity investments over number of emerging economies, number of G20 economies, BRICS economies, and try to understand that we have to diversify away from the US.
Okay. On that note, I want to bring in Sharat Kohli into the conversation. Sharat, the important point there raised by Mithali, where she talks about diversifying away from the US. That's a point that's been raised by India at the BIMSTEC meeting as well. And India has said that it is currently studying the tariffs, and there could be possible opportunities in this entire scenario. What do you think those opportunities could be? And also your take on India, for example, speaking at the BIMSTEC, talking about a BIMSTEC Chamber of Commerce to boost trade within the region itself.
Good evening, Devika. Good evening to my fellow panelists and NewsX viewers. Well, I think if you ask me the opportunity, one of the sectors which me and my team analyzed today was textiles. Now, US imports total of about $80 billion of textiles in a year. India is contributing right now about $10 billion. So there's that gap of $70 billion. The rest was being sourced from Bangladesh, Vietnam, and other places, So I think India has got an opportunity there because the tariff levied on India is 26%, whereas if you compare it with Bangladesh, 37%, China, 54%, Vietnam, 45% plus, and so and so. So I think there is a big opportunity there because the cost of the garment is very, very limited. You cannot play around with the cost too much. So I think Indian garments or Indian textiles or apparels which were reaching in the US, India was not able to, step up the $10 billion mark because of the cost factor. I think that will now be to India's advantage. So this is one of the examples of where the opportunity lies for India. I think India can entirely capture that. Of course, we need preparedness. We need more factories. We need better quality. We need government support and other things. I mean, those factors, of course, remain. But what is more important to see here is that President Trump is putting America into a kind of an isolation because the pain which is going to be common for the rest of the world, it will unite the world. It will unite even the nations which do not normally get united because the pain is common, that the trade pain or the tariff pain is going to be common running through the thread across the world. So if the world unites and the world comes together, it will have two advantages. One, the dependence on America would finish. Two, the trade between, as Vitali was saying, the trade between these countries would start flourishing because India has got Middle East, India has got West Asia, India has got Europe, India has got Australia, India has got Africa. Well, the rest of the world is obviously there. I mean, America is not the end of the world. Well, as far as stock markets are concerned, Devika, you heard President Trump after the market onslaught yesterday saying, market is going to boom, just wait for a while, market is going to boom. But the markets will boom once they see the supply chains moving into the US. Having said that, I would like to add here that markets is like a baby. It reacts very quickly and the market has got a very good character. It puts things behind very quickly. It tends to forget it. It leaves things. So if that be the case, one small good news, and you never know, markets may start turning around. I don't see market remaining depressed for a very, very long time. They will definitely turn around. And more importantly, this isolation of the US and US corporates completely refuting the tariff announcement. And with China announcing 34% tariff today, this is a classic and a full-fledged trade war, a world trade war, which is broken up now. I'm sure this is going to count on the minds of the political circles in the US, including the Republicans, Devika. Even the Republicans, or within the Republican Party, President Trump is going to hear those voices of dissent. And that is when, and to that, the stock market mayhem. To that, the corporate voices which will start coming to him. So I think all combined, I'm sure a pressure is going to build on President Trump's mind, and he is going to turn this around. I still feel, although this has become a reality now, but somewhere in the corner of my heart, I feel that he's going to turn around. He's going to revoke some of the announcements. He's going to take back some of the announcements step by step, obviously not all together, because it's just come into effect. It will be very embarrassing for him to take it back all at one time. But you will gradually see there is a section 4C they have inserted in yesterday's order. That section categorically says that they have a right to modify if the other nations suit the US. Of course, I mean, they've left that gray area there to see if they can modify these orders. But this will have to be done because US cannot afford factory. Yesterday, I was giving a very interesting piece of data, Devika, on your channel as well. It was for a very short while. 1 acre of land in the US costs you $117,951, which is more than a crore of rupees. Average labor cost in the US is $7.25 to $17.50 for unskilled labor. Skilled labor is $40 a cent. So can you go and set up a factory? That's what President Trump aspires for. Go and come invest here. If you want to escape tariffs, you should have investment, start producing here, bring the supply chains to America. But this cannot be done overnight. The cost, although US is willing to give subsidies, but how much subsidies can be given? Even a very important point, Devika, even if American goods land here without tariffs, for better part of the country's population, they will still be unaffordable. Take, for example, Washington apples. Take, for example, pistachios. Even without tariffs, most of the people cannot afford. So, and that's the story around the world. So I think at the end of the day, Devika, President Trump will have to himself realize there is no other solution I find to this problem. It is brewing up into a major crisis, global crisis. It is already showing signs of recession happening in America. I hope that recession remains restricted to America, but some kind of cascading effect is going to be felt around the world. I'm sure this feeling of reality is going to sink into President Trump, and he'll take a call sooner or later. I am banking on that, Devika, like anything.
Okay, interesting point. Data there shared by Sharad Kohli. I want to bring in Gautam Mukherjee. Gautam Mukherjee, if the aspiration of a Donald Trump is to somewhere, of course, build some sort of a pressure on other countries. But secondly, it possibly is to encourage more and more, as Shah pointed out, for factories, for jobs, etc., to be set up in America for Americans. We've also heard that Donald Trump wants to replace the EB-5 visa program with the Trump Gold Card that has a price tag of $5 million, and it's going to become the new pathway towards a permanent residency and a permanent citizenship of the US, wherein the government wants people to invest. It's a way essentially of bringing in foreign investors into the United States of America. But do you feel that somewhere all of that calculation and mathematics would have been done already by the Trump administration, basis the data that's been shared by Sharad Kohli, where he says that it's not entirely feasible, given the sort of rates that America has, for anyone to really just set up a factory overnight in America, as it would be in some other countries in the world, where literally overnight operations take place?
Well, Devika, high-end factories such as the Taiwanese semiconductor factories, even though the cost of labor is higher somewhat in America compared to Taiwan, have moved. One has moved, another one is moving, and they involve billions of dollars. Your standard communal garden Chinese manufacture, which is based on mass labor and mass production, is not going to move at first. So the portraying of this as a reversal of all the globalization of the last 30 years is not, I think, what is intended. What is intended in the first instance is to right the balance of trade. Now, China has a favorable balance of trade over $1 trillion in its favor. So Trump is particularly concentrating on China and its proxies. India has a balance of trade. This other business of we shall diversify and go to 100 other countries is wishful thinking. America is India's biggest trading partner. Our balance of trade is about $30 to $45 billion in our favor. If we start seriously considering more and more defense cooperation, this could rapidly come down. As it is, the tariff burden on India is fairly limited. And if you see today's stock market going down 1,000 points almost, that is more in sympathy with the US market. Now, in the US market, there have been a number of top-class economists, including Nobel laureates, who've been predicting a massive stock market crash because of incredibly high valuations, particularly in the IT sector. For this to get some spots knocked off is entirely good. If you remember, for months we've been listening to how Indian stocks are overvalued, lakhs of dollars of foreign investment left our country over the last 3, 4, 5 months, and now they're coming back a little bit in dribbles and drabbles. Valuation was cited very blithely by almost every foreign investor as the reason why Indian stocks are not doing well and need to be exited from. The other secondary point was, of course, earnings. Now, what is the reason for the kind of valuations you've got in a lot of the IT stocks in America? None, except speculation and massive money and the fact that this is America. As soon as DeepSeek came, they got a knock on their, solar plexus. And now for this to come down in a roundabout way is probably going to prevent a much deeper crash and a much more sudden crash. Then you come to the business of just how much money the Americans owe. $36 trillion and counting, heading towards 40 trillion very soon. 26% of their revenue goes towards paying just the interest. So now when you start selling residency, remember this is not citizenship, residency, and it suits both sides, because if you buy a residency in America for $5 million, the sort of catchment base is over 37 million such people. So you're really not thinking too much to sell, say, 1,000 of these, which will bring down some of that 36 trillion that he owes, that the country owes. And if you're a resident, that's fine. If you're a citizen, you have to pay taxes on your global income per American law. So a lot of rich people would rather be residents and come in and out at will without going the rest of the route to American citizenship. So a lot of this makes sense if you look at it purely in terms of righting the balance of trade for America and attracting high value manufacturing into America, then you will find that a lot of this will work. And the other thing is, as soon as you do impose these taxes, people come hat in hand and say, can I give you this and can I give you that and can you please take that off? Which is what this 4C or 4 that was mentioned by one of the panelists is all about. So I am altogether hopeful. He is shaking up a global order that needs shaking up. I don't think he's going to get a lot of protest from anyone, at least in his party.
Okay, I want to leave the last word with Jayji. Jayji, I just have a couple of minutes. Your perspective on the same, that how do you think Donald Trump is really going to now brace for the storm, because it's also the US markets that have been impacted heavily by the tariffs?
From his utterances, it doesn't seem like he's going to change track. You see clearly if you step back and look at the larger strategy, and if you are American, you will not really argue against it. With the changed circumstances, you look, there has been no war in US which were influenced by actors outside of US. There have been civil wars within US, but not anyone from outside because they were protected by the oceans. Now with hypersonic weapons and other kinds of technological advances in military, they're exposed. And therefore you see, Canada becomes a soft belly. So he's looking at Canada being part of US so that they're militarily strengthened. Similarly, the argument goes for Greenland, including the ability to control the new passages that will open up through the Arctic Sea. So, over a 50-year period, 100-year period, maybe it makes sense. But in the short run, what probably Trump is trying to do is that he's looking at his age, he's looking at trying to leave a legacy, he's trying to do or execute a strategy which should be executed over 10, 15, 20 years in a period of 2 to 3 months, which is what is causing the problem. Now, maybe the tariff readjustments make sense. Maybe countries like India have developed, and therefore we should not be putting up such large tariffs. But it can't be done immediately. It's harmful and hurtful for every single economy if these changes are brought in so rapidly, because real life can't adjust this fast. And hence I think, coming back to your question, the US president will continue in the path of rapidly doing and trying to make a lot of changes. He may not get success, just like he hasn't got success in the Ukraine-Russia peace that he was looking at. He may not get success in trying to get manufacturing shifted to US for the reasons that Gautam and Sharad just mentioned. And therefore, there will be disruption that will happen without many gains to anyone. And that will be unfortunate. It will shake up the world without really giving any benefits to anyone, because it's being done very rapidly and probably not being done in the right way.
Okay, all right. On that note, I thank all of our guests for joining us on the broadcast.